Today, we will continue working our best trading strategy combined with our best trading indicator. We will again focus on top-down analysis to find out great entry locations. Lastly, we will discuss how we can make better entries. If you are good to go, let's start now. Let's take a look at a couple of clean price action moves that happened recently and use them to sharpen our trading skills. If you happen to look at the Solana chart, you probably noticed this very clear previous day low area. But even before that, we had this multi-imbalance zone combined with 2 hour supply order block above, along with a clean support and resistance flip level. So as a typical price action trader, this specific area should have stood out as the most optimal trade location. If I had been looking at this chart a bit earlier, I would have expected this exact type of movement to happen. Then if I noticed the market structure shift followed by a couple of breakout structure moves, this could have been a great opportunity to take a few short trades here. As you can see, identifying tradable areas and looking for entry opportunities really isn't that complicated. It just takes patience and discipline. Most of the time, it simply comes down to waiting for the right moment to act. However, in this case, something unexpected happened in the market. After the internal swing failure pattern, the structure dropped hard and took out the previous day low much earlier than expected. So now let's break that down. Then, right after the swing failure pattern from the 2-hour charts, what formed next was this very clean and perfect equal low setup. Okay, let me remind myself again here what really happened in the situation with you. Normally, I would expect price to keep pushing higher and higher until it reaches the order block area. But this time, that expected move did not happen at all. What actually happened here was a swing failure pattern followed by an internal structure break, which then created this very clean equal lows. What I see here is a PDL, meaning the previous day's low combined with equal lows. And price is very close to taking that level out. So in the end, taking a short trade right after the structure break and a small pullback into this BPR area is not a bad idea at all. Because there is a lot of liquidity waiting below for us, including the institutional liquidity sitting right there. So this is telling me that price is trying to move down right now, and we really should not be fighting against the most current direction. However, if you ask me personally, I would still say the most optimal trade location would be these upper areas to take a short from. So if I were to set a limit order here with just maybe a 0.5R risk, would not be a bad idea either. So if there are two different trade opportunities available, if you see two trades, it is always better to divide your risk into smaller parts and take the multiple entries instead of going on with a one single big position. Okay folks, have a nice and chilling day. Do not overdo it. See you next time and please take care of yourself. Completed the free trading course but still need more? My master classes teach liquidity, imbalance, and the market structure in detail. Combine them with forward and reverse trading using momentum superboxes and yo-yo cost average entry models. After that, you will master scalping with a one-screen free trading view indicator, a revolutionary trading system. Finally, you will learn to invest your profits using my 10-year swing investing with working agent system. Interested? Please see the video description.